Thanks, Karen. Well, good evening, everyone, and welcome to our regular council meeting of July the 25th, and I'll call our meeting to order. We'll start off with adopting the agenda for tonight's meeting. So a recommendation here that the agenda for the July 25th, 2022 regular meeting of council be accepted and passed. I'm going to need a mover and a seconder for that. Moved by Lisa, seconded by Dan. All those in favor? That's carried. Thank you. And we'll move on to disclosure of pecuniary interest. With anything on tonight's agenda, I have nothing to declare. Councillor Yake?
No.
Councillor Hearn?
No.
Okay, thank you. Next up, we have a presentation from RLB Chartered Accountants with our draft consolidated financial statements. So there, I see Murray Short there. Murray, are you giving this presentation tonight?
I sure am. Thank you very much.
Well, welcome. I'll
Thank
turn
you.
the floor over to you.
Sure. Thank you, Mr. Mayor, members of council. Appreciate the opportunity to walk through the presentation that we have for tonight. Unlike how we presented things in the past, where we walked through the financial statements and then some graphs that kind of supplement. What we're doing this year, with your permission, is walking through our presentation, which also includes some of the financial statements. So it's kind of covering both the graphs and the financial statements in one presentation. There's more detail in the financial statements, which are included in the council package. So happy to answer any questions on any of it. But if I walk through the presentation, I think I'll cover most of what council and your residents will be interested in hearing about anyway. So I'll do that, but happy to answer any questions as I say. So with that, I will share my screen here. Okay. So first off, thank you to township staff. Obviously, there's been a bit of changeover in some of your staffing, so we've worked with both Farhad and Adam over the course of the audit process, as well as the rest of the finance department staff, and we certainly appreciate their diligence working with us. Met with Farhad a couple of times so far, and very happy. He seems to be very diligent, very focused on kind of the financial reporting and having good internal control. So I think he will transition very well into the role. So congrats on that hire. I think he's a good addition to your team. So with that said, I'm just going to talk a little bit about the kind of audit process itself. Then the audit report. The financial statements, as I mentioned, are included in large part within this presentation, as well as some of those graphs. And I'll just talk about next steps to wrap up the audit and finish your reporting with the Ministry of Municipal Affairs and Housing. So first off, in terms of our audit, we should communicate what our materiality level is. So this amount of just over $1 million is an amount that's based on the total assets of the corporation. And ultimately, our materiality number is what allows us to sign off on our audit report. In theory, it's an amount that's intended to be high enough that it would impact decision-making at the strategic or council level, rather than kind of day-to-day operational decisions. But what ultimately this amount is if we were to add up kind of collectively any misstatements we found in the financial statements, that they could conceivably add up to that, and we could still sign off on our report. In practice, though, we kind of adjust anything up to 5% of that amount. If it's kind of below that, it may be that we would consider it inconsequential. But ultimately, anything that we kind of come up with over the course of our audit or that staff brings to our attention, we're gonna adjust anyway. So so that number sounds like a high number. When it comes down to our testing, we're using much lower thresholds. Sometimes we're doing random testing, which means we could choose a $20 transaction just as readily as a $20,000 transaction. So it's just kind of a conceptual number that allows us to say that the financial statements are materially correct ultimately. In terms of the audit procedures and processes and our audit plan that we communicated in our pre-audit letter back in the fall of last year, there were no significant changes to any of those audit plans. So the information that went to council back then is consistent with what our audit process was. We have no significant internal control deficiencies or anything from that standpoint to communicate. So again, happy with the audit process and the staff and the internal controls that the municipality has in place. And also should communicate that we have no known independence issues. So in order to be independent auditors, we need to be independent. And so I can confirm that we have no vested interests. No members of our audit team or our firm or employees of the municipality or have any bearing on any of the financial reporting over the course of the year, and that allows us to perform an unbiased audit. From the standpoint of the adjusting entries, 13 adjusting entries were booked as part of our audit process. By and large, they were standard entries that we would expect to be booking. Some of them relating to kind of reporting the tangible capital asset activities, so your infrastructure and purchases and amortization that happens kind of at the end of the year rather than kind of over the course of the year. As well as reserve activities and some of those things that we would expect to be booking at the end of the year. So no surprises from that standpoint. And there were three very insignificant differences that we determined in our audit that we did not adjust. So they would be unadjusted differences, insignificant value, and so wouldn't really have any significant bearing on the financial statements. And so those were left as unadjusted. All very standard, by the way. A number of our municipalities will have more entries doing some of those routine things as well as cleaning up, but a very clean audit from that standpoint. In terms of our audit report itself, it's included in the package, as I mentioned. For today's presentation, suffice it to say that our conclusion is that the financial statements are presented fairly in accordance with Canadian public sector accounting standards. So it is a clean audit opinion. That's what you're looking for from us. We've been through our audit process, done all the testing and analysis and discussions with staff to be able to satisfy ourselves that that is the case. And just to confirm that our audit has been conducted in accordance with the applicable auditing standards as well. So the first statement, which is on page 5 of the council package, is the statement of financial position, which is on the next screen. So it shows the assets, liabilities, assets split between financial and non-financial assets, and then the accumulated surplus at the bottom. So it highlights your cash position, some of your receivables, payables, taxes receivable in particular, your long-term debt position, as well as your tangible capital assets, which is by and large or entirely your largest asset that the municipality has, as is the case with any municipality, and really. So the statement of financial position you can see here. You can see the cash and investment positions. If you add up these first two lines, about 31.4 million. That's up significantly from last year end, which was about 21.2 or 21.3. A number of reasons for that. One of them is a loan that was taken out in the year that hadn't been spent at the end of the year. So you can see the increase in long-term debt about halfway down the page of about $4.5 million. Part of that increase is also because of the increase in the line just above it, the deferred revenue. So that's your development charges, gas tax, and other funding you've received that you haven't yet spent. And so that also has increased your cash position at the end of the year. And then lastly, when we get to the schedule of accumulated surplus, you'll see a significant increase in some of your other capital funding. So really in total, that $10 million increase in your cash and investments has come from monies you received, you expect to spend, it just hasn't gone out the door yet. So it's sitting in various pockets, and some of it being that new debenture through the Federation of Canadian Municipalities. In terms of other financial assets, you can see that there have been some changes. Your taxes receivable is actually quite low for a municipality of your size, and we'll get to that when we get to one of the graphs, but that did decrease a fair amount, about 150,000 from last year end. It's pretty consistent with what we're seeing with a lot of municipalities. Some of the, just as a result of the pandemic, some municipalities were a little more lenient with ratepayers in terms of catching up on or making their tax payments. And so across the board with virtually all municipalities that we audit, they all crept up a bit in 2020 and dropped back down in 2021. And you can see that's consistent with what we can see here. Trade and other receivables is comprised of a number of things, but it's water and sewer charges, it's HST rebates that you're entitled to, it's some rec, and that balance is fairly comparable, but up slightly from last year. And then you have some long-term receivables that are shown in the notes, but they're relatively small in value. And then lastly, we have the investment in Wellington North Power, and you can see that balance has gone up just because of your share of the profits of Wellington North Power over the course of the year. The liabilities, I've touched a little bit on the long-term debt. You can see the increase there because of that new debenture. The deferred revenue is also up, and we have in the slides some more detail on that. But again, that's development charges, gas tax, and those sorts of things. And then accounts payable at the end of the year is pretty consistent with last year. So the net of the financial assets and the liabilities is your net financial assets, and you can see that balance has increased, not to the same extent as your cash and investments because of the increase in some of the liabilities as well. But your net financial position did strengthen at the end of the year. Down at the bottom, we have the non-financial assets comprised primarily of your tangible capital assets, and you can see that that balance has increased, meaning you spent more on capital asset additions than the amortization that was taken on them, and so that balance is up by about 900,000 year over year. We add up everything on the statement, we end up with your accumulated surplus. You can see that it's increased by about $4.9 million. That's sorry, $3.9 million. That's the increase. No, it's $4.9 million. That's the increase in your surplus on the year that we'll get to in a moment. So just taking a look at some of the graphs related to the statement of financial position, we have your cash equivalents. You can see the big increase. A significant portion of that is because of that new loan that I mentioned. Were it not for that $4.5 million at the end of the year, $4.6 million, you'd still be at about 140%. So what this graph is showing is the amount of cash that you held on hand at the end of the year, or cash and investments that you held on hand at the end of the year, relative to the amount of money that you were spending over the course of the whole year. So 100% would mean that you held at the end of the year same amount of cash as you would expect to spend in the following year. It's actually based on the past year, but it's basically saying you had enough cash to spend to cover all of your costs throughout the year at the end of the year. That is not, it might sound like you're holding way too much cash and investments on hand. I will say that as with any municipality, a lot of those funds are tied up in reserve funds and set aside for future purposes. So there's a reason for them. You're not just sitting on a stockpile of cash unnecessarily. It is necessary to maintain those strong cash positions. And your cash position was strong at the end of the year. The blue line here is the average of our other municipal clients, and yours at the end of the year was high, but again, somewhat augmented by the debt that was taken in the year that hadn't yet been spent. But a strong cash position nonetheless. The next graph is your taxes receivable, and I said that when we were on the statement itself that your taxes receivable position is in a strong spot, and you can see that's the case here. This green line is your municipality. The blue line is the average for other municipalities or other municipal clients. And this is showing your taxes receivable as a percentage of the total tax that you're collecting over the course of the year. So that includes the county portion, it includes the school board portion, as well as your own portion. And the amount of tax receivable that you have at the end of the year is 4.1%, significantly lower than the average of our other municipal clients at 6.7%, but also significantly below the low risk threshold that the ministry itself puts out. It would consider anything less than 10% to be low risk. So at 4.1, you are certainly in that low risk category. So really strong, good indication of the strong tax collection by your municipal staff and your residents and ratepayers staying on top of their tax bills. Long-term debt, we look at as a comparison to total tax revenue. So you can see the jump up because of that new loan. I will say that 66.7% is not an excessive amount. We have some municipalities, because of capital projects that they've done and so on, that have had tax long-term debt, sorry, as a percentage of their total tax revenue well above 100%. So 66.7 isn't too high. I think, you know, I can say confidently that your municipality has used debt expeditiously. It has not taken on excessive debt, and only has done so when it's had significant capital projects it's needed to do. Really, this is kind of inflated a bit by the fact that you borrowed the money in 2021, but you're anticipating spending it in the future, and so it's just kind of augmenting your tax position without, or sorry, your debt position without having had the time to invest it or really to considerably repay it over the course of the year. So I'm not concerned with that rate at all. It's in fact kind of lower than your debt position was in 2017. But again, even at 66.7%, that's not a concern from the standpoint of what would be considered a reasonable debt load for a municipality. So tangible capital assets, we look at, again, relative to total tax revenue. That's to try and normalize for the size of the municipality. Wellington North is larger than a number of our municipalities, smaller than some as well. And so by comparing it to total tax revenue, that tries to kind of normalize for the variance in size. And I can say that your investment in your capital assets has exceeded the average of other municipalities in each of the last 5 years. I will comment, as I do with any council presentation, I'm an accountant, I'm not an engineer, I'm also not one of your municipal staff, so I can't really comment on what your needs are from an infrastructure standpoint, but certainly I can say that you've spent more on average than our other municipalities, and so that probably bodes well, but I wouldn't want to comment on what your infrastructure needs are, but you've spent well on and significantly on your capital assets. So the next graph is showing your tangible capital assets versus budget and versus amortization. I would focus on the blue and yellow bars on this graph and ignore the green for a minute, and I'll explain that in a second. But the blue and yellow are your capital asset additions, being blue, and the yellow is the amortization. It's not a perfect comparison, but we would like to see the blue bar above the yellow bar more often than not. That means you're spending more than what the amortization is on your assets, which is at least some indication that you're staying on top of your infrastructure needs. Again, hardly a perfect comparison because amortization is based on the cost you spent on assets in the past rather than currently. However, I can say that in each of those 5 years that you've spent more than what your amortization is, which I think is a good sign. The green, the reason that I kind of tend to discount what's budgeted versus the actual expenditures is that it's very common that municipalities budget more than they wind up spending because projects sometimes are budgeted in 1 year, but because of delays, you know, challenges with timelines, supply chain issues we're hearing a ton about these days, projects sometimes carry over to the next year and they would wind up in the next year's budget. So in some ways, you know, the same project might be included in 2 consecutive years budgets. So it's not really an indication of any challenges that your budgets are regularly higher than what you've spent, which is why I tend to look at the blue and yellow in this graph. So lastly, we have a graph showing tangible capital asset additions by funding source. So this is just kind of an informational thing to show that your capital asset purchases in 2021 are coming from the 2 green and the purple bars primarily. The 2 green colors are coming out of your reserves and reserve funds. The purple is capital grants. So you've been able to secure some capital grants to cover some of those. And the orange is just the amount that's spent out of your tax levy, so a relatively small proportion of your total expenditures in 2021. So the next statement, which is actually on page 6 of the council package, is the statement of operations. So it shows revenues and expenses. It shows the budget, so you can compare budgets to actuals, and it shows expenditures by department as well as the annual and accumulated surplus. So just to look at that statement for a moment. You can see that revenues have increased significantly from 2020 to 2021, from 18.7 million to 21.3. A number of reasons for that. Most notably, you can see the increases in grants and other income. Other income is broken out in the notes, so I'll speak to that in a moment. And then obligatory reserve fund revenue recognized is the money that you're pulling out of development charge and gas tax reserve funds primarily to fund asset purchases and other things. And so that has also increased in the year. Just in terms of that other income, I don't have a slide on it, but the reason for that increase is an increase in your income from Wellington North Power, as well as increases in some of your fees, rents, and those things that you're charging, as well as an increase in donations in the year. So there's kind of a number of reasons for that revenue to increase, most of which wouldn't be budgeted, because things like donations you don't anticipate to receive significant amounts of, but you did receive over 200,000 in the past year in donations. Expenses, you can see, are also somewhat up by about 900,000 or so, but because revenues are up by a greater amount, you have a higher annual surplus on the year, about 4.9 million versus 3.1 million, and that increases your accumulated surplus from about 144 million to almost 149. Most of that accumulated surplus, again, is your tangible capital assets, your investment, or your ownership of the infrastructure owned by the municipality. I should actually mention really quickly, this annual surplus of $4.9 million, it sounds like a huge surplus on the year. When we get to the schedule of accumulated surplus, you can see that your actual operating surplus is less than $500,000, which is kind of what we'd expect to see. This $4.9 million includes revenues that you've collected that you've set aside into reserves and reserve funds for future expenditures. It's partly unexpended capital funding, so money you've raised for capital purchases that you haven't yet spent. And so while $4.9 million is a surplus on the year sounds exorbitant, there's a number of reasons for it, and your operating surplus was much smaller. And we'll get to that shortly as well. So as we do, we compare expenditures by department, both in the current year and over the past 5 years. And not surprisingly, transportation and environmental services being your largest expenditures as a municipality, pretty consistent with a number of our municipalities, with rec and other departments spending their shares that you can see here as well. And on the next page, we see the 5-year averages. And we don't expect to see a lot of variability from 1 year to the next in any department. Sometimes with significant, capital expenditures that increase amortization, or one-time expenditures, you might see a bit of a jump in one versus the other, but they're pretty consistent, as you can see. So the next statement on page 7 of the council package is the statement of changes in net financial assets. So what this does is it takes out, starts with the annual surplus, backs out all of the capital asset and non-financial asset activity. And what it results in is the increase or decrease in your net financial assets. Ultimately, your net financial asset position increased by about $4 million. Again, because your cash, increase in cash and investments were greater than the increase in the debt you took. So an increase in your cash or your liquid asset position at the end of the year. Lastly, we have the statement of cash flows, which is on page 8 of the council package. So this has a whole lot of information. I won't go into it in great detail, but again, it starts with the annual surplus. The middle number, or about midway down the page here, is your cash flow from operating activities. So your general operations created positive cash flows of about $12 million, up from about $10 million the year before. Then you have capital activities, so that's your expenditures on capital assets, your proceeds when you sell capital assets, which on a net basis decreased your cash position by about 6.5 million. We have your financing activities because of the new loan taken in the year that increased your cash position, and then your investing activities. So you put about $5 million into investments. So the net of all of those 4 things is an overall increase in your cash position of about $5 million. Again, that just to reiterate a little bit, your cash position, your investments did increase very significantly, but it's largely because of funding you've received you haven't yet spent, the long-term debt, the increase in your reserves and reserve funds, as well as that unexpended capital funding that we'll get to on the schedule of accumulated surplus. So this schedule is on page 19 of the council package. And so I will jump to it now, but this breaks out that $149 million accumulated surplus that we saw on previous pages into the different components of it. The vast majority of it, as it is with any municipality, is your investment in your capital assets. But then you also have a significant amount of unexpended capital financing. So again, this is that number I was mentioning. It's about $3 million of capital funding you've received that you haven't yet spent, but also is not in reserves or reserve funds. So that is part of the reason for your cash increasing. You do have some assets funded by debt, so that would kind of decrease your overall investment in your capital assets. And then you have some kind of general operating surpluses. This 474 is the amount I mentioned that was less than $500,000. That's your general operating surplus for the year. And then you have your investment in Wellington North Power, various other amounts for rec, community centers, arenas, your BIA and other amounts. And then down at the bottom, we have reserves and reserve funds. This excludes development charges, gas tax, and other obligatory reserve funds. These are our council funds set aside by council, not by your agreements with the Association of Municipalities in Ontario for gas tax or the Development Charges Act. These are ones that council set aside in the current and past years for future purposes. I believe that there is a recommendation coming from the Treasurer's report to allocate this $474,000. So just to explain that, general surplus, municipalities will often put aside that general surplus to cover future expenditures. Some will put it into a tax rate stabilization reserve or working funds reserve. And then depending on where the source of that surplus has come from, allocate some of it to capital reserve funds and so on. So I believe the recommendation is to top the working funds reserve up to $1.5 million. So that would be about $39,900 that would go into this reserve. And the balance of this $474,000, so about 434 would go into some of your reserve funds. So subject to council's approval of that motion coming from your finance departments, that would mean that this would bring the general surplus down to zero and would be augmenting your reserves and reserve funds, just so you know how it will show in the final financial statement should council approve that recommendation. So last, or some of the last slides we'll talk about deferred revenue. So this is monies that have come into obligatory reserve funds and other deferred items, development charges, gas tax, those sorts of things. They were not covered in the reserve funds on the previous page, but through legislation, agreements, funding agreements, those sorts of things, they're deferred because they're required to be deferred and used in broadened income only when they're spent. And so you can see here a table of what's included in that, the largest portion being your development charges, which increased by about $1.4 million because of contributions received being significantly in excess of what was spent. Again, included in this amount, there's gas tax. That bounces up by about 740 or 50,000 up to 1.17. And then you can see there's your Recreational Land Act reserve fund, as well as some other amounts. And that total brings your deferred revenue up to about 4.45 million from 2.2. So this graph shows all of your reserves and reserve funds because of the confusion around some reserve funds being obligatory, some of them being council set aside and how they're presented. This is just kind of accumulating all of them. It's all money that council has available to spend on future expenditures. Just that some of them are less at your discretion as to how you spend them because of those agreements and legislation and so on. But it's still money that is available to be spent. And once again, the green line here is the Township Wellington North. The blue line is the average for the municipalities. And so you can see that your reserves and reserve funds on average are better funded than our other municipal clients to the tune of about 238% of your total tax revenue, versus the average of our other clients being about 183. Again, just with the caveat that I don't, I'm no expert on what the balances should be or what your infrastructure needs will be, but certainly as a percentage of your total tax revenue, reserves and reserve funds have more funding in them than the average of our other municipal clients. So arguably a strong financial position to be in. Also explains why your cash position is stronger than our other municipal clients as well. So just in terms of next steps, we're here to present the draft financial statements through this presentation. Subject to your approval of those financial statements, that allows us to finalize our audit with the receipt of the management representation letter, which we'll ask for from your treasurer. And then once we finalize the financial statements, then we can submit the financial information return to the Ministry of Municipal Affairs and Housing on your behalf, which we'll do shortly after finalizing the financial statements. So with that, happy to answer any questions the council may have. Again, there's more detail in the financial statements themselves. In fact, so much detail that I could talk about it for an hour or more, but I'm trying to, in the interest of time, to keep it to what I feel is important and necessary to cover. So again, happy to answer any questions, and maybe I'll stop sharing to so that we can see who's here. There we go.
Okay. Excuse me. Thanks, Murray. Any questions from members of council in terms of his presentation? Dan, go ahead.
Thanks, Murray. Everything, I mean, things look good. I mean, you presented it in a positive light, and there's a lot of numbers there, and sometimes they're hard to follow, but you do make it relatively easy to understand. So things look good, and thank you very much for the presentation.
Great, thank you.
Okay. Any other questions?
I don't have any questions. It was a very easy to follow and complete presentation, so please, no questions.
Okay. Well, I have one for you, Murray, and that is, you know, a number of your graphs and comparators that you use, which are very helpful, and I appreciate those very much. Reference the denominator, if you will, as percentage of tax revenue. Mm-hmm. A significant proportion of our revenue is water and wastewater revenue. Is that included in that figure, or is it strictly taxation? Strictly
taxation. And the reason for that is that, well, there's a number of reasons, I guess. One of them is that your water and wastewater revenues are really intended to fund just your water and wastewater activities. So we don't include that in a lot of the comparatives because, well, for that reason. Secondly, some of our municipalities don't have water and wastewater services. So it would be a lot harder to make an apples to apples comparison. So really just use kind of strictly general tax revenue that's available to municipal operations more broadly, because we find that it gives a truer comparison and tries to normalize better for the variances between different municipalities.
So just as a kind of a addition to that, you commented that some of your clients don't have water and wastewater systems. A significant amount of our assets and sorry, our reserves and those types of things are directly related to those water and wastewater systems.
Yeah.
So that would tend to make us look better when we're comparing, or make those numbers relatively higher when we only consider the tax revenue.
Yeah, it's a fair comment for sure. It's, again, none of these comparatives are going to be perfect. Arguably, over time, your water and wastewater should operate, well, I guess your tax would too, should operate on more or less a break-even basis. And you know, the majority of your water and wastewater revenues would be covering direct operating costs in the year, although a portion of them certainly would be funding those reserves and reserve funds as well. So yeah, it's a fair comparison, or a fair argument, to be sure.
In this year, it specifically showed up around the long-term debt piece, because that long-term debt we took on was for wastewater asset.
Yeah.
And so if it were just tax-supported debt, the number would the line would have continued down, but hockey sticked up because it was wastewater related. So,
Yeah, fair enough.
okay, I think that's all I had. Again, thank you, Murray, for the presentation. We do have a couple of recommendations here that we need to dispense with to let you continue your work.
Sure.
So I have a recommendation here that the Council of the Corporation of the Township of Wellington North receive the draft consolidated financial statements for the year ended December 31st, 2021, and further the council authorizes staff to allocate general surplus pursuant to the reserves and reserve fund policy 006-19. Can I get a mover and a seconder for that, please? Moved by Lisa, seconded by Dan. Any discussion on that? Okay, all those in favor? That's carried. Thank you. And again, thank you, Mary.
Great. Thanks very much.
Okay, the next item on our agenda is to recess to move into the public meeting. So I have a recommendation here that the Council of the Corporation of the Township of Wellington North recess the July 25th, 2022 regular meeting of council for the purpose of holding a public meeting under the Planning Act for James and Joanne Mackin, a minor variance, Peter and Mary Reeves, a zoning bylaw amendment, and the estate of John Baker, zoning bylaw amendment. I'm going to suggest that that's moved by Dan and seconded by Lisa, and ask if everyone's all in favor. That's carried. Thank you. So we are recessed from our council meeting. We'll switch over to Committee of Adjustment here first. And I'll call the Committee of Adjustment meeting to order and ask if there's any disclosure of pecuniary interest. This is an application in regard to application A16/22 for James Mackin. Councillor Yake?
No.
Councillor Hearn?
No.
And I have none to declare either. So we'll deal with the minutes of the previous Committee of Adjustment meeting of June 6th. And the recommendation is the Committee of Adjustment meeting minutes of June 6th, 2022. Application A15/22 be adopted as presented. Can I get a mover and a seconder? I'm going to say Dan and Lisa again. Any question on those minutes? All those in favor? That's carried. Thank you. So we'll move on to our application A16/22 for James Mackin. The location of the subject property is described as lots 39, 40, 41, 42, Southside Mill Street, survey Allen and Geddes, lots 39, 40, 41, Northside Mill Street, survey Allen and Geddes, part George Street and part Mill Street survey Allen and Geddes, and is municipally known as 550 Silver Street, Mount Forest. The subject lands are approximately 0.84 hectares in size, and the location of the property is shown on the map in the package. Purpose and effect of the application to provide relief from the minimum frontage requirements for the severed and retained parcels created by severance, application B85/21. The proposed variance will permit a reduced lot frontage of 30.2 meters for both severed and retained lots, whereas the bylaw requires a minimum lot frontage of 30.5 meters. Other variances may be considered where deemed appropriate. How was notice given for this public meeting?
Notices were mailed to property owners within 60 meters of the subject property, as well as to the applicable agencies. Signage was posted on the property on July 5th, 2022.
Okay, thank you. Matthew, can you give us a rundown on this application, please?
Perfect. Thank you, Chair. So, yeah, I think the summary you sort of gave sort of encapsulates everything that we're looking at today. The only note I would add, essentially the applicant will be looking to sever the lot in half and is proposing to construct new single-family dwelling on the severed parcel, and ultimately can't meet the minimum lot frontage for requirement for the R1A zone. So as you mentioned, they're seeking 30.2 meters on both the severed and retained parcel, where the minimum is 30.5 meters. And with that said, planning staff have no concerns with the application, as the request is minor, meets the intent of the official plan and zoning bylaw. Thanks.
Okay, thank you. Has any further correspondence been received in respect to this application?
Nothing other than what's listed on the agenda, which is from the Saugeen Conservation Authority with no objections.
Thank you. Any persons wishing to be notified of the decision must submit a written request to the Secretary Treasurer of the Committee of Adjustment. And with that said, I'll open the floor for any comments or questions from the applicant and or the public.
So Jim and Joanne are on the line. You just are in the meeting on the phone. You just need to press *6 if you have any comments that you'd like to make.
Jim and Joanne, if you're with us, if you would like to make any comments, now is the time. If not, if you could let us know, that'd be great too.
We are here. We don't have any comments.
Okay, great, thank you. Karen, is anyone else registered to speak in regard to this application?
No.
Okay, so I'll open up for comments or questions from the committee members. Dan, go ahead.
Yeah, I have no concerns. It seems to be very minor, and I think it works out well. So I'm okay.
Okay. Any other questions? No, I agree, this seems very straightforward. Okay, so we'll just, the decision will be as follows, that the minor variance applied for in application A16/22 for the property described as lots 39, 40, 41, 42, south side of Mill Street, Survey Allen and Geddes, lots 39, 40, 41 on the north side of Mill Street, Survey Allen and Geddes, and part George Street and part Mill Street, Survey Allen and Geddes, and is municipally known as 550 Silver Street, Mount Forest, to provide the following relief. Number one, that a reduced minimum lot frontage of 32.2 meters be permitted for the proposed severed and retained parcels created by severance application D84/21, whereas the bylaw requires 30.5 meters. All those in favor? That's approved. Thank you very much. And that'll move us on to adjournment. And the adjournment reads as follows, that the Committee of Adjustment meeting of July 25th, 2022 be adjourned at 7:42 p.m. Moved by Lisa, seconded by Dan. All those in favor? That's carried. Thank you. So we'll move now to our public meeting. And I'll call the public meeting to order. And we have two applications we're dealing with tonight. ZBA 15/22 for Peter and Mary Reeves, and ZBA 16/22 for the estate of John Baker. And I'll ask if there's any disclosure of pecuniary interest with regard to either of those applications. I don't have any myself. Councillor Hearn?
No, I do not.
Okay, Councillor Yake?
No.
Okay, so our first owner applicant is Peter and Mary Reeves. The location of the subject land, the land subject to the proposed amendment is described as concession 3, part lot 71, registered plan 60R2149, part 2. The property is approximately 1.99 hectares in size. And of course, it's shown on the map in the package of information. Purpose and effect of the proposed amendment is to amend the existing site-specific residential R2-58 zone. This application is seeking to rezone the subject lands to change the minimum required units from 34 to 21. Additional relief may be considered at this meeting. How was notice given for this public meeting?
Sorry, notice was given for this public meeting. They were mailed to property owners within 120 meters of the subject property, as well as to the applicable agencies. And signage was posted on the property on June 28th, 2022.
Okay, thank you. Matthew, can you walk us through this one, please?
Gladly. Thank you, Chair. And again, once again, through you, Chair. Before you today is a zone amendment application to amend the existing site-specific R2-58 zone. So as mentioned, the applicant is proposing to reduce the minimum number of units required on the subject lands from 34 to 21. So to provide a brief overview of the history on the subject lands, just bear with me here and interject if there's any confusion. So in July of 2017, the applicant severed 4 lots from the subject lands. So at the time, planning staff did express concerns with the proposed lot sizes and, more importantly, how these severances would ultimately impact the development of the retained lands. Ultimately, the 4 severances were approved as requested. So an important sidebar to this timeline is the county official plan does seek to attain a minimum density of 6.5 units per gross hectare in greenfield developments. So once again, returning back to the timeline here. So as part of the 4 severances approval, the township did request a condition for zoning compliance to ensure that this same minimum density requirement that I mentioned in the county official plan would be met. So again, fast forward to October of 2017, the subject lands were ultimately rezoned from R2 to site-specific R258, which ultimately established a minimum density of 34 units, which was in conformity with the official plan density requirements. So this calculation included both the severed and retained lands that was made to ensure the zoning remained consistent with the minimum requirements of the official plan, despite the outcome of the 4 severances. So lastly, our last fast forward here, present day, the application before us today is seeking to alter that minimum lot requirement from 34 units to 21 units. So on figure 2 of my report, I've attached a preliminary site plan of the proposal, which ultimately includes 6 semi-detached dwellings, as well as 9 singles on the retained portion of the lands. All in all, 21 units. One more note to mention here, to date, 4 single detached dwellings were built on those 4 severed lots in 2017. So with the inclusion of those 4 lots, the lot area of the severed lands, with the inclusion of the retained lands, the proposed development would ultimately yield a density of 4.16 units per gross acre, while the OP strives to achieve a minimum density of 6.5 units per acre. So hopefully I didn't lose anyone in sort of my math and my timelines here, but nonetheless, I'm happy to answer any questions if there's any. Thanks.
Okay. Thanks, Matthew. Stay tuned. We'll go through a couple more steps here. We may get back to some questions. Has any further correspondence been received in respect to this application?
Yes, we have received correspondence from the Saugeen Valley Conservation Authority, who find that the application is acceptable.
Okay, thank you. Anyone wishing to be notified of this decision, the bylaw will be considered at the regular council meeting following the public meeting. Persons wishing notice of the passing of the bylaw must submit a written request. And with that said, I'll open the floor for any questions or comments from the applicants and or the public. Do we have anyone registered to speak on this one, Karen?
So, yeah, Jim and Mary Reeves were on the line, and I've lost them. They were on computer. I do have a new phone number that's appeared, and I'm not sure if that's them or not. I've emailed them, but I haven't been successful in getting a response from them. And they haven't identified or emailed me to let me know that this phone number is there. So I don't have them on the line.
Okay. Is anyone else registered to speak on this application?
Not on this one, no.
Okay. So you've reached out to them and they haven't responded. Should we give them a couple of minutes?
I don't know, once I noticed they had dropped off the call, I emailed them during during the previous part of the meeting. I just want to ask 519-261-0072. I'm allowing you to speak. I'm just wondering if you would press *6. Oh, I'm just getting an email from Mary. They've lost connection. I'm going to see if they're rejoining. Can you try?
Okay.
Karen,
Oh,
Karen, we are here.
Can you hear me now?
yeah.
We keep losing our internet.
Okay.
Yeah, okay, thank you.
Okay, you're on the phone. Okay.
I didn't realize we had to press the star in front of the six.
I didn't realize that. was
Okay,
you.
yes,
Okay.
so we have been listening. We just lost internet connection.
I just was wondering, did they really come up with? Are they approving the 21?
Application, now is the time when you would normally do that. So
Yeah,
I understand you were disconnected.
Yeah, we've been trying to keep on but we've been cut off a couple times on the computer. So that's when the things start to get interesting. Then the thing goes on the blink. So, anyways, well, we're just listening, and we really haven't got anything else to say other than what we proposed to have it changed back to the 21 units.
Okay. All right, then we'll open it up.
Okay, so if I'm going to unmute to *6,
Correct. Yes.
or how do I
How
So
do you
stay
mute?
tuned. We may have questions for you, so just don't go away. But I'll open the floor up
we'll
to.
be here by the phone.
Well, I'll open the open the floor up to members of the council to see if they have any questions in regard to this application.
Yes. Oh, okay, we're listening. Yeah.
Anybody have questions, Dan?
So just in regards to Matthew's opinion, you're satisfied, Matthew, that with all the things that have happened since 2017, that you're okay with this amendment?
Sorry, so
Go
through
ahead,
you,
Matt.
Chair. Through you, Chair, just to answer Councillor Yake's question, it's somewhat of a difficult position for staff to be in, given that in 2017, the township did put a conditional request when the 4 lots were approved to ultimately put that 34 unit minimum as somewhat of a almost as a safeguard per se, to ensure, we understand, that the county has approved those 4 lots, and that's, what the applicant was seeking at the time. But like I said, the 34 units, again, was a safeguard to maintain and ensure that essentially no additional lots were taken from that land. And ensuring conformity with the county official plan density requirement.
Any other questions from council? I have one, Matthew. Now, I was looking at the concept drawing, and there's the cul-de-sac with the semis on one side and the singles on the other side, but there's a portion of land at I'm going to say the east side of the property that appears to be untouched. What would be happening with that? Because I understand it would be landlocked as well.
Correct. So through you, Chair, my understanding is that, and again, this concept is preliminary at this stage, but my understanding is that area is slated for a stormwater management area. And yeah, it's not shown on the site plan, but that's my understanding of what that area would entail.
Darren?
And perhaps Pete and Mary could speak to this in a little bit more detail. But those last 4 lots that were severed off on Wellington Street, they're on Force Main to get up to the sanitary sewer. So the lay of the land back in that triangle piece doesn't really support gravity feed sewer, but maybe Pete could speak to that a little bit more detail.
Okay, Peter and Mary, would you like to comment on that?
Yeah, can you hear me?
Yep,
Oh, you can hear me?
I can, yes.
Hello? Yeah, okay. Yeah, well, this thing was all originally designed in 2007 properly. We went down Wellington Street. It was checked out to see if the sewers could go back where we're proposing for now, right? So it took from 2007 to 2017 to finally get 4 lots approved with all the stuff that went on. And then everything was kind of in line to do what we're doing now. We're intensifying the density by about 6 or 7 units to what originally was proposed. And it's not really our fault that it took whoever 12 years to make up their mind on what they want to do. And then when that time comes, they didn't give us any option but to sign it, because we had the 4 lots ready to go, and the sewer was designed to do what it did, and that's how it would end up being left. Like, you can put gravity flow sewer in for the new subdivision, right? But all that land at the east side is retained for stormwater management, and it's not accessible to get sewers to. And the configuration of the land, you can't change the design of the road or nothing, because if you look at the map you got in front of you, at the very southeast side, when you get to the end, you only got 110 feet deep on the lot. But you can't change the configuration. There's just no way you can do anything else with it. It's one straight chunk of road that will support gravity flow sewers. And that's about all I got to say. But if this thing had went through in 2000, before 12 years, we wouldn't have been having this today. And I just feel that, we went to all the rules and regulations for how many years to get it set up, and all of a sudden somebody thought they want to make it more density. So for us to deal with the 4 lots we had, because I was not digging up the road to change, to put 5 lots in there, dig up all the road and dig up all the people's yards to change it. That's the way it was designed to be done, and that's what we stuck to. So somebody wanted me to put all these houses behind, or high-rise apartments. Well, my opinion, if we can't have some single-family dwelling homes there and some duplexes on the other side, being the configuration of the property, then I guess it is what it is.
Okay. So just for clarification, Darren, did you say that the 4 lots that were created along Wellington Street are on a force main for the existing sewer now?
Yeah, that's right.
Okay. Matthew, go ahead.
Just if I can provide maybe a little more clarity around the density piece through you, Chair. At the time, back in 2017, when the severances were requested, ultimately planning staff had the same concerns for the entirety of the subject lands as a result of the severances. So the request for that 34 unit density remains stable from 2017 to present day. That number has never changed in the official plan. So just in terms of clarification there.
Okay. All right. Any other questions or comments from council? Lisa, go ahead.
Yeah, I'm still having trouble with this, to be honest. I'm trying to, I don't understand why a lower density is necessary. I have trouble with land being such a finite resource and young people not being able to afford homes to make lots bigger. And if someone could paint the picture a little bit better for my dunce brain, that would be wonderful.
Okay. Not sure who to direct that one to. So is it impossible to obtain a higher density on that parcel? I think maybe that's where I'm trying to paraphrase Councillor Hearn's question.
Yeah, that's a little more eloquent than I put it, so thank you.
Can anybody speak to that? Matthew?
I mean, through you, Chair, from a staff perspective, planning staff, I mean, I think you can read through the lines of what I'm sort of saying tonight. Staff would be in a position to keep that 34 unit density requirement. And like I said, from a staff perspective, if there was 2 rows of semis, that could be an option as well as townhouses. Like I said, the R2 does have a lot of options for various housing typologies that could get that density number closer to the 34 or even above.
Okay. Thank you. Any other questions or comments? Dan, go ahead.
Yeah, I guess I look at the planning opinion about, council should be satisfied with the proposed zoning amendment. But I think from what I know or what I've talked with Pete and Mary in the past is that the single family homes are consistent, will back on to single family homes, right? The ones on the west side of the road. So the single family homes will back onto actually Mr. Reeves's property, along with a bunch of other single family homes, where across the road they put in as many semis as possible without having to put in, without being able to use that land to the east, which is we've heard is no good, and without having to put in maybe a large multi unit apartment building to meet that density. So I think that's what they're trying to do here. I think it certainly fits in that area, although it may be a little shy of the density. But I mean, they don't want to build a multi-unit building to meet the density in that area. I think. I hope I'm not speaking out of turn here for Pete and Mary, but.
Yeah, the struggle I have with this is that, we've had other instances in Mount Forest in particular where there's been some increasing density requests in existing communities, and there was significant pushback, and it was expressed several times that, that in the existing neighborhoods isn't the place to have higher density, that we should have higher density in the greenfield areas on the periphery. And this is exactly what this one is. And so if we're not going to ask for the minimum density that the county official plan requires, how are we going to get more dense housing that offers greater types of options for different people to live in? I mean, as residences have gotten more expensive, it's becoming harder and harder for the average person to be able to afford a place to live in our community. And the single family homes are beautiful, but I just think they're out of reach for such a large segment of our population currently that it makes it very hard to, I really struggle with supporting going back to a lower density. Any other questions or comments? Okay. So that kind of wraps up that application.
So I can talk. I think we can hear you. Hello, can you hear me?
Yeah, go ahead.
Hello? Okay, well, you're just passing one thing before you get to us. That's going to allow 50-foot lots. But you won't allow us to put 45-foot lots on one side and more density on the other. Like I said, I don't know where everybody lives, but I would imagine most of you people don't want a 4-story apartment building behind your house. And I do not have a problem with them being built in some areas, but we are all single-family dwelling homes on this side. And when this was originally done by the county planner at that time, he said they would work with single-family dwellings because, you know, it's hard to stuff other stuff, 2- or 3-story homes behind your house on the street. And if this had got done in a timely fashion, we probably wouldn't be having this conversation right now. It's not Pete and Mary Reeves' fault that it took 12 years for whoever to make things work. Every time we thought we had things in line, and somebody changes the rules or do whatever. I just don't think it's fair to the application when it starts in 207. Now it's 222, and we're changing the whole ball field. Like I said, in 217, when we agreed to, or whatever, we didn't have any options, or the 4 lots wouldn't have been, they weren't going to sever the lots. And that's what they were designed for, to be 4. There was actually 5 units there. One was previously done. There were 6 houses there. There's 5 of them that are on force main sewer, but the last 4 applications, that's what it was all about. And they want to make that to 5, but we were going to have to dig up everything to do it, and that wasn't happening.
And we live very close to the other development on Wellington Street there, and those cookie cutter places are, like, those people barely have enough room to park in their driveways. And the same over on Church Street. Some of those guys' bumpers are practically hanging out on the street, and I can't see the point in that. I think you should have a normal-sized lot, not these squished-in semis. I just think it's detrimental.
Okay. Any final questions or comments from council before we move on to the next application? Dan?
I just want to make just in regards to that last comment that made by Mary. If you drive around both Arthur and Mount Forest, I mean, because we've gone to try to get more people in less places. I mean, the streets are full of cars, right? They're parked everywhere. You can't even drive down a street in Mount Forest without having to stop to let cars come the other way or whatever. Now, I know that has nothing to do with this proposal, but it's a valid point, and I think that you know, it needs to be taken into account.
Okay. So there's nothing further. We'll move on to, so just for Peter and Mary's understanding, we have another application to deal with before we get to the bylaw that will related to your application. So we'll move on to that second applicant. This is for the estate of John Baker. The location of the subject land. The land subject to the proposed amendment is described as Part Lot 13, Division 2 to 4, East Owen Sound Road, Registered Plan 60R1463, Part 1. The property is approximately 36.16 hectares in size, and the location is shown on the map attached. Purpose and effect of the proposed amendment is to rezone a portion of the subject land approximately 1 hectare from agricultural site-specific A1 to agricultural commercial to facilitate the construction of a new facility to fabricate farm use equipment. Additional relief may be considered at this meeting. How are notices given for this public meeting?
Sorry, notices were mailed, sorry, I'm trying to get Jim moved into the meeting. Notices were mailed to property owners within 120 meters of the subject property and as well as to the applicable agencies. Signage was posted on the property on June 29, 2022.
Okay, thank you. Matthew, can you give us a presentation on this one, please?
Great, thank you, Chair. Before you today is a zoning bylaw amendment seeking to rezone a portion of the property from site-specific agricultural to agricultural commercial zone. The applicant is seeking the aforementioned amendment to facilitate the construction of a new 13,400 square foot facility for repair and sale of farm use equipment on the subject lands. Furthermore, the application would be subject to site plan control should the township choose to do so, where some of the details associated to landscaping and parking, etc., will be looked at more closely. So all in all, the application conforms to the zoning bylaw, the official plan and provincial policy, and planning staff have no concerns. Thanks.
Thank you. Has any correspondence been received in respect to this application?
Yes, from the Saugeen Valley Conservation Authority, and they find the application acceptable.
Okay. Thank you.